for joining us today, and thank you for coming to this real-time payments panel. I'm sure you'll agree that the morning's sessions have been quite interesting so far and quite good, and I've really enjoyed day one of the summit, so thanks for joining us. I am Robin King. I am one of the leads for industry relations at Payments Canada. We look after the FRs through this modernization journey. And prior to joining Payments Canada, I was in banking for about 11 years, where I was, for the most part of that, in payments. And I'm excited to have this panel joining me today. Some expertise in real-time payments from a global perspective, and both internationally and locally here in Canada. And I'll get them to introduce themselves in a minute. But before I do that, I just wanted to say that I've been coming to the summit for about 3 years. Well, this is my third summit, and every year there seems to be a key theme that emerges from the summit, and you have a lot of topics on it, or it comes out in discussion in other topics. So if I think about 3 years ago, it was probably about fintechs and how they're going to disrupt banks, and then we had blockchain and AI probably last year. And for me this year, I think one of the key topics and what the standout theme is going to be real-time payments. And I think it's a factor of where we are in Canada, but it's also how we see it sweeping the globe across the world. So being a payments summit, obviously most of you know a lot about real-time payments, of what's been going on across the world, what's happening in Canada. So I do hope that this panel provides some unique and different perspectives on that, and not just to tell you what you know. And with that, I'd like my panelists to introduce themselves. And Jean, I'll start with you, just to tell us who you are, what you do, what's your company, how you're involved in real-time payments, both here in Canada and across the globe.
Sure. Hi, thank you all for coming. Like you, I spent about half of my life on the banking side building systems. That was before real-time payments. And then I spent the other half of my working life on the vendor side doing product and strategy work for payments. I've been involved with real-time payments since 2006, starting in UK. Done Sweden, Singapore, Australia, US, etc. And I work for a company called Icon, and we build systems to connect banks to real-time infrastructures. The thing that's unique about us is we do it in 100% open source stack, so it gives a really interesting economies of scale and total cost of ownership changes. And we've come up with what we think is a factory way of building new scheme packs, because we are doing it for banks across multiple jurisdictions and multiple geographies. And so being able to do that quickly and at scale is important. And so I also serve on the board of US Faster Payments. So I support faster payments both from a vendor side and also from the industry engagement side.
Ulf? Ulf?
Thank you very much. I'm very happy to be here. My name is Ulf Persson. I'm from Sweden. I have been involved with integration technologies for the last 30 years. And through that, worked with people and processes and culture. The last 15, 20 of those within the financial services space, so to say. I work for a German company called Seeburger. We provide integration services, either on-premise or as a cloud service, or however you want it to be deployed. And we have been quite successful packaging up solutions around how to enable data. So we don't build the applications, we enable data internally, externally, large file transfer, APIs, you name it, with regards to either from a bank to corporate or a corporate to a bank, or any use cases in between. So I hope that we can, elaborate further on this together as a team.
Thank you. Ken.
And
Hi,
thank you very
Ken
much.
Wong. I'm part of the Global Transaction Bank at TD Bank. I look after product strategy and innovation for the Global Transaction Bank itself. Unlike those guys who've done a lot of other things, I'm a long-term banker, although by education I'm actually a microbiologist. Been in the industry for about 30 years, but with a gap of 2 years where I had my own startup where we worked with Visa a lot. Prior to coming back to Canada, so I had a 15-year gap between starting here at Canada Trust and coming back to TD. I was kind of traveling the world for 15 years, and my last job before coming back to Canada, I used to be the global head of payments for Standard Chartered Bank.
Thanks, Ken. So I think let's just jump straight into it. And my first question is, what is the state of real-time payments across the globe? You know, we generally hear about faster payments in the UK, probably being one of the oldest, NPP in Australia, now a little bit more talk about the US. But globally, what are we looking at the moment?
Well, I think we're coming to an exciting point. We've actually, I think, all agreed on the definition of what real-time payments are. Because by some definition, the Schengen system from 73, was it? Was the first one. But we kind of understand now the characteristics of what we would consider a real-time payment system. From my perspective, sort of the exciting part is we now, I think, 50% into the countries that have real-time payment systems, with Europe coming on board. There seems to be a significant predominance of ISO 20022 based, although 8583s still hang on by the fingernails. And in many countries, we're now seeing generation 2 and generation 3 of real-time payment systems coming around. And so the things that was most interesting to me, I did I was involved in two projects, one in Africa and one in East Asia. And in one case, the really interesting thing to me was this was the second generation of a country going from telco-based thin data P2P systems to still thin data, but opening it up to minor telcos and banks. So expanding the ecosystem of actors is one thing that was interesting. And the one in Asia, which was more of a clean slate, what was interesting there was how full-featured it was. You had to have a directory. You had to have open APIs because you wanted to see a fintech ecosystem to come up around the real-time payment systems. You had to have interesting charging models built into it because whereas some participants would charge end participants, other participants would charge each other about how they would do things. So it was a combination of interchange and not interchange. Really thinking about building fraud handling up front, not just, and really recognizing that whereas before you could rely on banks to be that door and everything after that door was protected, as you were extending your real-time payment system to merchants, to the phones of individual people, as you discuss, as you debate whether you would allow direct access into the network or not, the question of security then becomes much more about how do you do it end-to-end, defense in depth at every stage, as opposed to, just check you once at the door and once you're in, everybody is happy. So I think we're becoming much more sophisticated. We're thinking about use cases ahead of time rather than build it and they come. And it's much more robust conversation now.
So Ulf, just building on that, what have we learned from the implementations across the globe so far? What has worked, what hasn't worked? And given that every jurisdiction is unique and Canada's obviously got its uniqueness, what can we learn from those lessons?
I think, for those of you who are listening to the various sessions this morning, it was a lot of discussion around standards, obviously. And the beauty with standards that there are so many of them, and the combination of them, one way or the other. And then the data, how to maintain and manage the sometimes large amount of data. I was listening a little bit earlier to the session here around cross-border, how to move data across, maintain that, to trust the data. I mean, you can have an infrastructure and solve this, but if you cannot trust it, I think that's one of the big takeaways that we see from an implementation perspective. And then together with that, of course, processes, technology is one thing, but if you don't have the relevant stakeholders on board, people, education, now we are somewhere in between new and old, and to make sure of that you have a team, you move that forward and learn together. I think those are some of the lessons learned from a project perspective. And I think they are more or less the same wherever you are in the world. Of course, in some cases, you have regulations that drive certain way of doing things, but still a mix between old and new is important to really cater for.
But I think at the same time, what I think I see around the world of faster payments right now is every country has put a faster payment system in the country, has done it for their own reasons. Is it for consumer payments? Is it some corporate? And how it works is completely different around the world as far as limits are concerned. So, for example, the countries which there's still a 700 euro limit to it, whereas Australia, NPP, really has no limit to it. So my fear with faster payments and the way countries are building up right now, they're being a bit myopic to say, okay, I'm building it for my community, but then what is the end goal? The end goal is what like SWIFT is trying to do with the experiments with Australia, Singapore, China, Hong Kong, to do cross-border types of payment. And if we don't build, and these countries don't start building it from a endpoint perspective, we will get locked into something that cannot be expanded.
Ecosystems, no?
Yeah.
It's important. No?
From my perspective, I actually see a slightly different set of winners and losers. So from my perspective, what I've seen is countries that priced real-time payments as a premium service did not see a significant uptake, whereas those countries that said, like I like Europe because they actually said real-time payments is going to be the next better payment instrument, as opposed to some other countries which said, oh, it's going to be another one and maybe a niche one. And if you treat it as a niche one that you have to pay extra for to use it, then it's not going to get a lot of adoption. And if you're treating it, let's say like Singapore or like Europe, where it's the next step in the evolution of payments, then the adoption is much better. The other places where I've seen is you need to give it critical mass and believability. And the best place to do that, surprisingly, is governments. Everybody trusts the governments because that's where you get your pension from, that's what you get your social benefits from. And in the countries where government stepped in and said, this is going to be the way we're going to move forward, that's where we've seen adoptions much better. So from a societal point of view, I think, and one of the lessons for Canada is identify pockets for where you can see major drivers and make sure they're tied into your go-to-market program.
So, Jerry, you mentioned earlier that Canada is a little bit behind on this. So there's over 40 countries now that have implemented or busy implementing real-time payments. And given that Canada's coming off a different base to most countries, having some form of in-market solution, when we do implement a real-time system in Canada, what do you imagine it to look like, and how it'll be different to what we have today? I don't know, Ken, if you want to.
I think it's not so much. I don't think we've defined what it should look like right now, because we actually haven't talked to the business people to say, what am I going to do with this system? Who is it for? What products are we building on top of it to cater for our clients? Is it for cross-borders and non-cross-border? From a cross-border perspective, are all the compliance issues with cross-border payments put into the rules of the faster payment system? Then we can build products. Otherwise, if you don't have an end goal of saying, this is what I want to achieve for my client, it's just, as you said, another payment system. So some of the things that were very interesting, that we saw around the world was how people are using the fast payment system. When Singapore, the first day Singapore put in the faster payment system, the consumer bank actually picked up on that and started sweeping money from one bank to another bank, held it overnight, and in the morning swept it back. Right? So we need to understand the use cases for it. What I also see is basically, I'm very excited for faster payments, even from a global perspective too. If I look at what I can build for a corporate client. I mean, if you look at it this way, why do corporate clients have accounts all over the world? Because they need to make payments all over the world. They move the liquidity around the world using follow the sun methodologies. right? What if all the faster payments are up 24/7, my system's up 24/7 too? I could consolidate all my treasury accounts into potentially one area, less taxation problems or revenue repatriation problems, that from one account I can do any payment any point in time. The only reason why corporates have a lot of accounts around the world is because they have no access during off hours in the RTCs. That's one example. I can put you more examples of clients that I used to have in my previous lives that said, why can't we do this, that, and the other? I want to consolidate. I get all my receivables in one currency. Why am I forced to keep it in country in another currency just because I have some small payments for MRO kind of things?
I think we need to, again, there have been sessions around modernization and how do you transform not only the industry but the relevant stakeholders, and what do you need to think about from a banking point of view, from the corporate, the end user. You mentioned customer experience or user experience, how easy and not to do things, and I think that's important as well. We're doing modernization, we have modernization initiative, but really make sure of that we're getting somewhere, define the goals and the result. And it's a phased-in approach, and it will take some time because there's always back to, how do you use and innovate around certain technologies, and how do you move things in parallel?
So how do you see that transformation?
Can I just jump in for 30 seconds? I apologize. So I would make a distinction. I would make a distinction between payments and cash management. So when we make payments, when I buy a book, we don't want to think about payments. That should be invisible, right? I go into the Amazon Go store, I come out, and then magic happens behind the scenes. And in that case, banks ought to work with merchants or bill payers or whoever and just make that seamless and leave the people out of it. And then we have cash management, which is, yes, I sweep between my accounts, or I'm a corporation and I am paying my invoices and payroll. And there we run into productization. And again, I think the key thing is how do we, banks as provider of products, get paid for doing those services? Although I've now heard it for 5 years that payments are going to cost zero in the margin, I think they'll continue to not be true for a while longer. But more and more, banks will have to figure out what services they provide in addition to moving money and bundle that with them. And so I quite frankly do, and I've heard that one of my colleagues in US said, yeah, I'll make payments for free, but I'll charge you for the accounts. And whether you charge people for accounts, whether you charge them for liquidity, access to your balance sheet, I think we're going to see changes in how that gets done.
Yeah, and that's actually one of the questions I was wanting to ask was, given the scale of change that needs to happen specifically within a banks or even in their corporates to enable and to implement real-time payments, how do you, and to drive the adoption, you're going to need to have cheap, cost-effective options. So how do you recover that scale of change and that scale of implementation, and how have you seen that happen across the world?
So the one thing that, again, going back to that work I did in Africa, we looked at central infrastructure built on proprietary components and an open source. Interestingly enough, the initial investment was roughly the same, but over 5 years, open source wound up being half the cost. So one way is to bring your total cost of ownership down. The other conversation is how much of re-engineering do you bite off up front? And we've seen different models. We've seen models where you leave the legacy alone and you build a new silo alongside and you make sure that they integrate nicely. That works, but we've also seen models where the legacy is in such a shape that it's not sustainable, and but you still wind up doing that. It's just you get to remediating legacy faster. But I think the most important thing to me is, again, this societal one. You have to aim at something. So again, when SEPA went live, German banks were surprised by the amount of instant payments that were hitting them, because banks in Netherlands just switched over the transactions and did not ask anybody. And whereas when I talk to my US colleagues about, well, why don't you just switch things over to the new rails, they say, well, we don't know if that's allowed. I have terms, I have conditions, I have rules, I just don't know. So those are the sorts of things that as you say, not technical, but wind up getting in the way of moving forward.
How do you, how can you capitalize on the data as such? And that, of course, could be a challenge depending on where you are in the world, due to regulation and what have you. Open banking is kind of something, could be in that way. So I think that could also be something, and I don't have the answer, but that could be something to kind of dig into to understand further. There's a lot of, I keep coming back to data and information, but there's a lot of information flow as part of this ecosystem. And so how can you capitalize on that, offer relevant services, stay competitive, but at the same time collaborate across the various stakeholders?
Yeah, Gene talked about more from a cost savings and operational cost savings perspective, but then from business perspective, you have to look at new business models. Yeah, the payment itself might go down to zero, maybe it might one day, but then, like what Ulf said, is can we charge for data, because data doesn't move properly today. Is it a value-add service, especially if you look at a wire compared to, say, faster payments, where there is predictability. So if I've had clients before who send a $5 billion transaction through, they had to send it 5 days before just to ensure that it gets there on time, and therefore the funding cost of 5 days. Whereas if you know that it's 100% predictable, it takes 2 minutes, okay, maybe a day, depending on if it's going cross-border or whatnot, you might save on 5 days cost of funds. All right, so look for value in predictability, in the data. The other way that you can monetize this or add value is, if you look at the US right now, Dodd-Frank 1073, the temporary exception is going to expire in July 2020. I'm part of the clearinghouse group looking at how to resolve that problem, or do we try and advocate to say that rule of, what the rules basically, you have to tell your client exactly how much gets there, when gets there for cross-border payment. Can't do that. No way you can do that today. So with faster payments, there is the potential of actually doing that, because generally speaking, full payment goes through and you know the timing. So look for business cases and use cases that will work to solve existing problems too.
Yeah. So I would add just maybe 2 data points. One data point is that in Europe, TIPS have published how much they will charge the banks, right? So the first 10 million is free, 0. And then it's a quarter of a euro cent, right? Something like that. Alibaba, when they did their internal metrics, they would be 1/10 of that. So maybe 1/100th of a euro cent. Or, so you begin to see that, at least from the central infrastructure perspective, these numbers are trending down to 0. Where the numbers are high, it tends to be due to the misaligned incentives that you need to build in the price so that you can take that money out of the price and give it to somebody else so they can play on your infrastructure. So I think we have empirical proof that, transaction costs are going to start trending down to 0. The other thing that sort of blew me away is that the company who has the most data in the world is probably Facebook. Facebook is now on the 3rd iteration of trying to build a P2P payment system, and the prediction is they're going to fail for the 3rd time. So clearly there is more to just having the data and just having the most data in figuring out how and what to do with it. And so to come back to Ken's point, what I've seen work, which is very against our nature, is for banks to actually understand the business of their customers and then consult to them about how to do it better. So as Netflix understands your taste in movies and suggests to you what you want to see, as Amazon understands your taste in purchases and suggests to you what you want to do, banks need to understand customers' business better than customers and tell them how they can do their business better. And I think if they can figure that out, that would be the business model that will make money.
Customers are always telling us what the challenges are, but sometimes we don't give them the solution. So if you can give them the solution, you will get their business.
And I've certainly seen a bank in a very small challenger bank that 80% of the project was Internet of Things and putting transponders and tracks and tracking them as they move around the country and doing cool analytics about whether they are overfilling the gas tank and conducting fraud at the gas pump, or when the trucks are going to be breaking down. And the payment part of it was the minuscule part of it. And yet that was the business model that worked really well.
So to your point there about understanding your customers and the business and have the accurate business model, I mean, this could also be an area where, well, we can see some examples where intelligence, AI, will fit in one way or the other. And there are different, we have experience from a bank in the Nordics, SEB, and they have done some research, and they also have deployed some services, trying to automate services. And that could be another way of thinking and utilizing, once you understand patterns and behavior, so to say, and learn more from that.
So just picking up more on the point of data, we recently did some interviews with corporates at Payments Canada. We partnered with Deloitte. And one of the interesting things that came out was that speed and faster payments was very low down on the list of priorities for the corporates that we interviewed. They were bigger corporates. They weren't, small mom and pop businesses. So, and the most important was the data. Speed was nice to have, but data was crucial. So is it a trade-off? Is it we are focusing on the wrong thing by looking at real time? Do we need to rather focus on data first and then speed up?
Well, I would say you got to be careful there, because large corporates are not our only clients. Like what I think during the main sessions is the highest number of payments is actually on the consumer side. So we do have to look at what the consumer needs to, and not just concentrate on the corporate, although corporates do put the largest amount, the value through the system itself. But then again, there's also the connection between the corporate and the consumer, or vice versa, that we have to cater for. So no, I don't think that we have to forgo speed. We have to run things in parallel, because we are catering for two different client segments.
I think speed is important. We can see, and maybe it's more towards larger corporates from a bank point of view, how do the collaboration between the bank and the corporates, the onboarding, how do you get the customers onboarded, and to do that as automated as you can, to minimize technology hurdles and other hurdles. So of course it's important that things should happen faster, but maybe there are other areas that also need to be considered and fixed before you think about faster throughput and having the right infrastructure to not only send the payment, but make sure of that on the other side there is a format and a structure that you can work with, maintain, and then send the relevant acknowledgement back. So onboarding is, I think, another area that is important to look into.
Well, I've recently talked to a real-time payroll provider, and for them, the biggest issue is mismatch of funding. So they pay out in real time, and they're happy to do that. The issue is that they either get funded by ACH, so the money isn't there, or they can get funding through, let's say, Visa Direct, which means that they have message telling them that the money will be there in 2 days, it's good funds. But in effect, they're still making a bridge loan, maybe to Visa, because Visa is a good customer. But they don't want to be in the bridge loan business. So it's less about fast. It's kind of a silly answer that I don't want to have payments moving at different speeds. So they're all instant, and I'm happy.
Yeah.
So it's not about speed. It's more about at the right time, at the right speed. And the only way to get to that point today is to make everything instant and to remove the limits, which is the other problem that we're having. And the question of data, again, keeps coming around on multiple stages. Do we want data with the payment? You are if you are a consumer, you don't if you're a corporate. You want to send it down a different pipe and reconcile it through a different pipe. And we've never had a problem with having lots of data. Our EDI formats are just as capacious as our ISO 20022 formats. I think my issue really is that we can't seem to agree on what data means. So my favorite example is that I had 2 treasurers from energy companies sitting at the panel, and both of them said, yeah, I have a standard. It's not like his standard, and I'm not changing. And so if you want to pay your electric bill to 2 utilities, you got to know those 2 standards. And I'm from US. We have a federal remittance standard. We have a state remittance standard. So that's like 53, 54 standards. But that's okay. But having standards at level of paying taxes for municipalities and knowing how to pay the dog catcher in Kentucky, it is the problem, because those guys change it and they don't publish it, and you only find out when it rejects. So if we can solve those problems, because we are in the enabling business. Hey, we will provide you the vehicle to carrying any information you want. But how do we get people to actually use it sensibly? I don't know.
Yeah.
So I'll just pause there to see if there's any audience questions that anyone wants to ask. There's a microphone.
Where do you see machine learning and artificial intelligence coming into play for detecting fraudulent payments within regards to real-time transactions at like real time?
So maybe I'll start, maybe you guys continue. So it's interesting that when a venture capitalist was asked about the list of most disruptive technologies, they did not list AI. And when they were asked, why wouldn't you list AI? They said, because it's in every one of the technologies that I've listed. So AI is actually going to be fundamental to almost everything. To start off with, again, going back to my work in Asia, a lot of things we focused on was predictive threat intelligence. So how do you find out before the attack is being planned that it is occurring? How do you prevent it from occurring? So that was a big differentiator from the vendors who submitted. Now that, let's say, you've dealt with the threat intelligence, we see fraud handling being done through defense in depth. So we're seeing that at the central infrastructure site, looking at certain things. We're seeing it at every bank, looking at certain things. And we also see cross-silo things coming up. And so to the extent that artificial intelligence enables you to get a better access to data, because you need a lot of data, I think it will facilitate everything moving forward. I don't think it's a silver bullet. I think it is one of the tools that you would have, along with a few other things. I don't know what you guys think.
Well, yeah, go ahead.
I think, from your question perspective, it's actually the process that we do today, and we do everything sequentially, right? So we do a fraud detection after the payment instruction is actually constructed. I press submit, then I do something. But what if you change the mindset to say, as you're typing it in, I can see what you're doing, and I do all that work beforehand, right? So AI, I don't think is going to help you with detecting fraud on an online basis, but as you said, it's the algorithms that AI will learn to say, is that fraudulent? And then, it's how you actually implement your system to say, when do I do that work?
I agree with you. We see it when we get these type of requirements from an implementation point of view. How flexible the workflow around the information, the stream, and as you say, not only don't think from a sequential perspective. It's what we're trying to do. When we implement whatever we implement today, it's more the agile approach, interaction, and I think it's the same. Then then learn from that, so to say. I think that's important. Business process and understand from the flow of data, and hopefully capture that to avoid fraud and others.
Right, but I think one of the topics that we were going to get to is how will the world change? And I think when you could take your time, you could model the 18th century of it goes from this paper basket to this paper basket to this paper basket. And I think we are scrapping the paper basket model, right? We're going to, things just happen at the same time. And I think what we're going to see is there will be a set of technologies that work in real time. And there will be a set of payments that fit into that swim lane. And then we will learn that there is another set of technologies that will work in hours or minutes, and there'll be another set of transactions that will fall into that, and we will have rules about how things work like that. That's where I think it will be. And AI will help make the real-time lane bigger, but it isn't going to be the only lane ever.
So is there lessons that we can take from countries like the UK, where they did start off with relatively low limits on real-time payments, but they did experience high fraud? But they've gradually obviously learned to deal with it and been able to gradually increase those limits. If we look at NPP, took a slightly different route. So in Canada, what can we learn from that and to avoid the foster fraud that comes with foster payments? And as you say, AR being one of them, but are there lessons that people have done that we can implement here?
Well, I would say, I think the UK did the right thing, start with a low limit. We already used to a low limit of $3,000 in our so-called instant payment system. Yes, we just brought it up to 10,000, maybe start at 10,000 and then build it up. The question always is, from a risk perspective, is why are you building that real-time rail? Who is it for? Mm-hmm. So in some countries, and I can tell you which one it is, Korea, they have two limits. One for retail payments and one for wholesale or commercial payments. So we can even take that approach to say, okay, on a commercial side, maybe we know who we're paying, and fraud and everything usually happens less because we can actually put it back on the client. You put the transaction through your online banking systems, you're responsible for it. Probably you can take a higher risk, but then from a consumer perspective, can't trust them as much from their own security, put it smaller and then build it up that way.
Yeah. And again, I would look at it maybe slightly differently. I think the lessons of UK don't apply because they're old. And we have moved a long way from that. So I would say differently, for example, in US, when we went from 2-day ACH to same-day ACH, there was this much uptick in productivity because it was already, accounts were already secured. So I don't actually believe there is such a thing as faster fraud. I think this was just coincidental in the case of UK. What we are seeing is, again, as a country, do you want to move forward like Australia did and said we're not going to preserve the lessons of ACH, we're going to leap forward? Or do you do it like US, where US said, well, we're not going to disrupt ACH, we're going to match the limit in the ACH system to the limit in the real-time payment system. And when ACH raises the limit, we will raise the limit. And at some point they will diverge because they are competing infrastructures. But I think those are the things that Canada has to think about. Is it, am I building another one? And they're all equal? Am I building a better one? And here's why. The one thing that we haven't learned yet, at least as far as I know, which I dearly hope we will learn, is that we're going to have a purpose code. Now, we keep talking about how real-time payments differs by use case. I would dearly love to have a purpose code and rules within the central infrastructure so we can do different use cases. So for example, right now, again, in US, there is discussion of settling the payments on our P2P system called Zelle through TCH's real-time payments. There is a slight mismatch. The largest transaction on Zelle is over $1 million, and Clearinghouse's limit is 25,000. So you could settle most, but not all transactions, and the rest will have to continue to settle the old two-day way. In fact, the riskiest transactions settle through the worst settlement mechanism, which is kind of ironic. So thinking those things through becomes important. And even though UK raised the limit to £500,000 Clydesdale Bank still limits it to 3,000. So again, this was a decision on where does the risk management live? Does it live in the central infrastructure? Does it live at the banks? And the answers are different, and there is no best answer.
I think you need to have a phased-in approach to cater for. We're talking about different type of business models and different type of end users as well, transformation journey, and then education. I mean, this event is also from an educational perspective. That's very important, and maybe it take a little bit longer time, but nothing is perfect, correct? And the world is changing every day, so I think.
I'm actually going to take a lesson from your country. That the thing that
I
was...
lived in so many, so which one are you referring to? But anyway, Sweden, thank you.
Yes. In my opinion, the thing that was most instrumental in Swish being such a success was that Sweden had identity system already available and built in
Yes.
into their clearinghouse. And so it was really easy to scale that up. And so one of the big things is it's less about faster fraud, it's about tighter and better identities. And having an identity management system would be a really good step.
Right.
So if somebody asks me, if I needed to do something as a country before I embarked on a real-time payment system, I would say, well, work on the identity system and get that working and socialize that among your consumers and your corporates.
The good thing is that it's still working. Even I live in US now, but I still, as a Swede, I can use services. So it works across borders as well.
Yeah.
So just to speak a little bit about Sweden. But anyway, yeah. Next question.
That's all what you came here for, right?
I just want to pick up on a point you
global.
talked about, Gene, in terms of ACH and batch payments. And maybe a question for you, Ken, is, at the heart of the hype about real-time payments, there was, talk that you're going to have a high-value system and you'll have real-time. There's no need for batch. Is there still a place for batch? Or do we see it going on a real-time rail?
Well, again, who's the client? If you look at large corporates today, all the systems run on batch. So they're never going to give us a real-time file and give us one payment at a time, and therefore, then the question is, even if they give me a batch file, will I use a real-time system or will I use the normal ACH? Then it comes to a matter of cost. Is that finality? Is it a debit system or just a credit system, right? So that how much data can I put through it? So if you said that the faster payments will be as cheap as an ACH, we'll have as much data as EDI, and I can do, say, irrevocable credits, but non-irrevocable debit. Irrevocable credits, but revocable debits. Then maybe. Then why would I even need an LVTS?
Why would it not be cheaper? Why it should be
It
significantly
should be, but
cheaper.
it's all the business model of the actual system itself, how much they want
Exactly.
to charge.
You still have silos of information within banks and silo applications, and that will not go away. So we believe, and I believe, that you need to have something that support both, maybe for quite some time,
Yeah.
even if you're moving towards more of a real-time enablement, both domestic, international, and across
Yeah.
borders. So
Yeah, it also takes those corporates time to change their own processes.
for sure, yes.
And maybe we separate a couple of things. So there is batch as in a batch file, and there is batch as in batch processing. And so I can certainly look down 130 years, and I feel confident that at that point, we will have corporates closing their books in real time, or not closing their books just be right in real time all the time. And at that point, there is no reason to send files. And if I'm not right in 130 years, come find me and let's discuss. But in the short term, what we are seeing is, yes, there are file delivery mechanisms, and there are message delivery mechanisms, and there are API delivery mechanisms into the bank. And then we're seeing more and more that they are individual message processing. There's certainly individual message processing through the central infrastructures. And then on the back end, you decide whether you deliver it individually, whether you put it in files. So
Correct, but that comes back to the same question. I mean, this was a question that we pondered where in 2010 when Payments Canada first came up, that 2020 strategy, and we started talking about it, is a payment's a payment's a payment. We're moving money from point A to point B. Y moves money from point A to point B. ACH moves money from point A to point B. Why does that have to be a different infrastructure? It's just a different service level, and therefore you charge differently from a risk perspective, a collateral perspective, or whatnot. Why do we physically need three separate infrastructures? Yes, maybe from a concentration risk perspective, but then if you talk from a pure infrastructure perspective, no, we don't.
and I think we've certainly seen hybrid systems where some transactions behave like real-time retail payment transactions, and some behave like wires on the same system. So I think, again, if we fast forward to some point, we're now at the point where we understand that we should look at things differently.
Yeah.
There is a clearing and settlement portion of a payment transaction. There is a risk mitigation portion of a payment transaction. There is a data delivery portion of a payment transaction. And you can go down the list of these attributes. And we sort of haphazardly threw this set of attributes and called it together and called it ACH, and threw that set of attributes together and called it wire. And what we're going, and this set of transactions, and that's a card. And what we're going through is we are slowly untangling them, not in a very methodical or straightforward kind of a way, but sort of kind of pulling on a string, and when we're able to decouple one string from a ball of yarn, that becomes clean. And
as Gene said, it's all about attributes. So give away some stuff about links right now is we're looking at putting different queues into links, the new link system. So Q1, we call it the UPM, which is the high value one, and it's instant. Maybe I have a fifth queue somewhere that says I settle on a net basis instead. Then it automatically becomes the ACH system, right? Why do I need two again?
Right, and certainly we're now seeing things like STAT has a single window, so whether it's ACH, wire, or real-time payments, you at least deliver it to the same place, and UK is moving to a more harmonized central infrastructure environment as well, so that seems to be the trend that we're moving towards.
So before we close off, I just want to check if there's any other questions from the audience. Chris? There's a mic, yeah.
Oh, thanks. So it's my own painful experience that you learn a lot more from your failures than your successes. Can the panel identify examples of real-time payments efforts that have gone badly wrong, and what can we learn from them?
South Africa never did experience a take-up. But that was a premium strategy that did not have the strong backing.
But a non-success.
Right. Similar in Poland, priced as a premium service, did not have a huge take-up. Maybe not a failure, but in Singapore, we can recognize that it's a multi-stage process where they implemented real-time payments, and they realized, well, people are still not using it in the taxis. And so what do we do about getting people in the taxis to do that more?
The readiness,
Right.
being ready or not. But, yeah.
There is an interesting thing, at least, again, the fact that we have limits, so I can make a real-time payroll, but I can't fund the real-time payroll in time, is an example of a problem. Let's see, which are the... Mexico, if you decide to create a real-time system by slow process of legislation, then it will take you 10 years or 15 years to evolve your wire system to a real-time payment systems. Now, and this is where we get to what's the definition of success. From the cost perspective, it was a fabulous success. But from getting to the market quickly, not so much.
Yeah, I guess from success or failure, I think every single system from a technology perspective, it worked. It all comes back down to business case and why are you building it for which client set, and have you priced it correctly? Are the functions correct? Then you'll take uptake. And unfortunately, also is a bit of mandating too.
So stakeholder not being involved. I think we mentioned that earlier as well as a fundamental challenge of why you would fail, and education and,
Do you
make
have a
sure
favorite example?
Yeah.
So,
We can open that up.
yeah. So it comes back to my point again, is for Canada's past payment systems for the future, what do we want to achieve there, right? So right now we're talking about, and again, looking more from a domestic perspective. Yes, I want to use emails. I want to use, a phone number, whatnot, to actually tokenize it. And there's that little diagram that you guys put together not too long ago. But then, if the objective in the long run is to actually hook up with, say, Swift GPI faster or another country, will that work? Because FATF 16 says, I need this data there, therefore I need to scan this, that, the other. Or do you have another way of doing it and say, maybe I use JP Morgan's IIN as an overlay for identification, like what Gene said, to say that phone number goes to that ID up there instead on a global basis, and therefore it's automatically scanned to a certain extent. So the question then again, what is the long-term usage of the system, and therefore design for it first and then phase it in?
I don't know, actually, if it's true, but it feels to me like if you don't aim high with your real-time payment system, then it's not very successful. And if you actually do aim high and you break some kind of new ground, and you try to take it farther than anybody else has taken it before, then it becomes a success. And I don't know if it's true, but it feels like that to me.
Any other questions? Here we go. Just the microphone coming in.
One there, one there.
There's one there
At
as
the
well.
front here.
Thank you. If you want to name one biggest obstacle for Canadian FI to implement real payment, what that would be?
Legacy infrastructure. Our counting systems that no one is 24/7 right now, I would say, our GLs. That's the biggest one, because the engine to run the payment system needs to be new anyway.
To add on, I don't
Yeah.
think that's specific for Canada, but yeah, I agree. Infrastructure.
In my experience, it tends to be a lot more around presence or absence of catalysts. So either having somebody who either having a real emergency or having somebody declare an emergency tends to be the best way to get things done.
We're trying.
Yeah, or mandated.
You need a few. But yeah.
Exactly. Even if you have to manufacture it.
Another question here?
Yeah, so if I were to summarize a big key takeaway from the talk is about use cases and what is the use case then in your perspective for Canada real-time rail? Like where do we see the long-term objective for Canada when it comes to real-time payments?
And I think in addition to that, because we've had in the consumer's view at least, we've had a real-time system. So is that the use case or are there others?
Consumer definitely is one, but then I guess one of the big complaints on a global basis of Canadian payments coming in at least is the non-predictability of the payment. So could it be used for just even normal wires instead today? Because I have clients every day saying, well, I'm sending it to BMO, I'm not sure what deductions they're taking, and therefore I don't know how much to send because I need to get $1,000 over there. All right, so that's one part of it. And then the other part of it is a lot of small dollar value payments, especially when it's coming from overseas, it's just too expensive because of all the Benny Ds and everything. So if the faster payment says full value, minimal charges, I think that would be an uptake.
And with regards to that, visibility, and how can you try to foresee some of the gaps as well? But I don't think there's a simple answer. But the combination of what we have said probably makes sense, one way or the other.
Probably a good question to Payments Canada about what research they've done. But again, I think what we see frequently is if you want to foster innovation, you have to identify a white space in your map that's not being served and serve it. And so you can either say, I want to do something that I do today but do it better, real-time payroll. You can say, or you want to go from biller-centric bill pay where you have to remember 30 different passwords to a bank-centric bill pay where you only remember one. But if I remember correctly, in Canada, there is a centralized, right? So that's not your problem. That is a problem in US. It wasn't a problem in Australia, but nonetheless, they went that way anyway. Now, what tends to be a problem is small to medium-sized enterprises and gig economy is not being served. And so you come up with a set of, so you can't get a merchant acquirer account, whereas a request to pay with a normal operating account works just fine. And so you identify that, you focus on that, and then you build out from that would be one way to go at it. But whereas in US, what they've identified, and also in Sweden, in US it was Venmo, was taking the business away from banks. In Sweden, it was Izete who was going to come in.
And you have something called Swish as well. So
No. Swish was created in response to the card-based threat. So there were a variety of either unserved or threatened, or I could do something a lot better than I did before, and then we'll have to throw it back to you. Presumably you know your country better than a bunch of foreigners coming in.
Okay, so we're almost at time. So just a quick 30-second each closing remarks if you want to. I know you like to talk about real-time payments, but quick 30 seconds before we close.
There's no such thing as faster fraud.
Ulf?
No, back to, I believe that, look through and think through whoever you are and where do you, banker, corporate, infrastructure. Infrastructure is key. It doesn't mean that you need to spend a lot on technology, but think through, stakeholder. It's important to align.
I would just echo something that Jean said actually, is think big, right? Know your endpoint beyond Canada, right? Yeah. If you just keep in Canada, that's very easy. Canada's not the problem, it's actually globally it's the problem.
Yeah. Okay, thank you. Thanks for joining us, and thanks to my panelists. I think it was a good discussion.